Morning guys, John here, Mr. Forex Fire. So we're going to try and set up the day to do a little bit on the 1 minute scalp. I'll try and keep it as short and sweet as possible. Show you the setups for the news guys that have not seen this yet. And the goals of doing scalping obviously is to try and take away the element of greed, but also keep you structured with regards to giving yourself the allowance to the charts rather than the charts dictating when you're there. So I'm just going to share the screen and then I'll talk a little bit more. Right, so basically at the moment we're going to go down to the 1 minute very shortly, but we're just going to have a look on the higher time frame. Not that the daily is going to make much difference. We're just going to see what the general bias is, to be fair. And what we see, we've been on a heavy down, okay. However, when you look further into the picture, we've got liquidity residing here, okay? And as price has come up, we've got a high, a lower, lower, lower high, lower lows, lower highs. And then we'll start to get to the consolidation area, but then we get a pullback, okay? So this sort of comes in conjunction with the trend coming down. So then we've got a lower high, and we didn't break this here. So we haven't got a lower low. It comes back into the box of the consolidated area, okay? Now, normally, when things get pullbacks and things like that, especially on consolidated boxes, you normally come in around about 50% or quarter areas, and that's what this has done here. Now, as it's done it and it's pushed back out, okay, it's pushed back out, it's more or less done a double top on here, okay? And then it's pulled back in. So looking at this on the daily, we're possibly going to be looking at around about a 50% area of that pullback there, where it could be tested at some stage, okay? So we'll just get rid of some of this. So I'm just going to bring and focus my attention into that at the moment. There's a lot of liquidity there, and more importantly, liquidity on that, because as we drill it down, you're going to see where all the money resides, okay? So we're just going to go down again. There's a lot of what we call trend liquidity, where it can hurt a lot of people, a lot of stops underneath here, limit orders and things like that. Go down to the 1 hour. And then we can see as we're drilling further down and times fractal, we can see that we've got a heavy area here. So we could see this being tested at some stage, possibly through the week. I'll go down to the 30 minute, 15 minute. Let's take a look. Just want to mark off key areas on the 15 minute as well, just on there and there. Let's get rid of this. We'll get rid of this because we know all the liquidity's down here, to be fair. And so at the moment, we know there's a lot of liquidity is residing again, especially up here as well. So price could come down to mitigate into either of these areas, to be fair, okay? But what we're going to do, we're going to set our goalposts. We'll go down to 1 minute and just forget about the candles at the moment. So I'm going to say, because it's just after past, I'll put this down as 8:30. And I'm going to mark it till 10:30. Anything that I do when it comes to scalping, I'll always give it a 2 hour margin. And what happens with that is it just allows me to watch for breaker structures and things like that. And what I found with my extensive testing is over the base of 2 hours, if we base this upon breaker structure, return and retest of an order block, you would tend to get maybe around about 2, no more than 3 trades within that 2-hour session. Okay, so again, we've determined, let's have a look. We've determined where we are, where the liquidity and everything is. Just want to scroll into this. And again, we've got a lot of consolidation in this area as well. So what I generally do is, as well, I'll get the path. I'll do the more prominent swing points on the lower time frame, and I'll explain this part in a moment. And it doesn't have to be exact at every swing point. It's just where you have a higher break of structure to a lower area, okay? And then we're currently here. Now, the reason why I do this like this is because time's fractal, okay? Now, when you see me scroll into this area, all these other little bits of intermediary price action and swing points will sort of fan out, and then generally will play into these areas. So you see, we've got up to the 15-minute from the 1 minute. And now what you are getting is what we call a market range area. So let's say we come down and then we come back up. We've got a pullback area here. It is a market range. So again, 50% of everything, price could come down, bounce off these areas, and then shoot off to higher targets. Doesn't always happen, but generally anything in the market does normally give around about 50% back, in fairness. So that's when we look from the 1 minute, you know that these ranges that are going to be between here and here, let's say, we know that that is of a 15-minute time frame. Okay, that's the general idea of this, and it has worked pretty well for me. So with that in mind, what we do is we go mark the high of the previous range, okay, and we can mark the low. Okay, now what I do, the reason why I do that is I would set an alert on the high. I would set an alert on the low, so I know when we've broken structure out of either the high side or the low side, we are obviously out of that range on the 15-minute. So then I would be looking for further price and order blocks to come back in to be respected based upon the 1 minute area. And generally on the 15-minute, once you get that break of structure, you sometimes would normally get the bias on the trend movement. Okay, so what I'm going to do, I'm going to pause the video and we'll be back in a moment. And what I do with these videos, I do record them as they're live, but I will, as I'm between areas of importance, I just pause the recording and come back on once I get the next alert. And I'll do that for the 2 hours duration of what I've set on here, which in this instance, it's going to be 8:30 till 10:30. Okay, so we'll let this play a little bit. We'll check the pip, the pip movement on this at the moment. So around about 13 pips, give or take. So it's in the middle. It's around about 7 pips between each area, and then we'll come back and we'll see where we are based upon the structure at the moment. Which you're looking at is, as you can clearly see, from the 1 minute to the 15-minute, because the black line's a 15-minute, we've got that uptrend coming up, and we've got high, low, high, low, high, low, high, low, high, low, high lows, and we're coming back down. We may get a bounce off this area, hopefully then coming up to take out this bit here. This would possibly then tell us we've got a reversal on our hands coming out of this consolidated area to go for higher targets up here where you've got swing points. Okay, so every time you see a swing point here, you've got 1, 2, 3, 4, and then obviously there's one here which constitutes this here. You've got higher targets up here where liquidity is going to reside. Okay, and that's on the 1 minute chart. You've got one here as well, but that will sort of constitute into this, and then the next one from that is certainly that area there. So we'll pause the video and we'll be back once one of these alarms goes off, or if an alarm doesn't go off in the next 10 to 15 minutes, we'll come back, we'll see where the price action currently is. All right, so I'll see you in a little bit. Hi guys, and so we're back. So we can see we have getting an alert. Okay, so from this here, the 15-minute range, when we go up, just to show you, we see the swing point, the 15-minute range has been broken, and you can just see it's just massively been broken by an engulfing area. So we may be missing a move on this, to be fair, but nothing to worry. We're just learning to keep within the structure, to be fair. So I'm just going to get rid of this. So that is just going to bring to my attention this area here, an order block. Okay. Now I'm going to measure, obviously, from the wick. Around about 4 pips. Long position out there. Problem we've got now is, if we just get rid of this, you can see we've got liquidity residing on the uptrend here, you know, so it's a little bit risky, to be fair. We've got wicks on the bottom here. So we'll sort of straighten that out. Come in. That will make it a 1 to 3. Again, not be taking any of these trades as such. I'm just showing you the concept of how you can set yourself some goalposts, okay? And within those goalposts, I can more or less 95 to 100% guarantee setting yourself a 2-hour slot, you will get no more than 3 trades within that 2 hours. That's on a really good day. Generally, you'll get 1 or 2 trades, and that's what this is all about. Allowing you to dictate to the charts what you're going to give to the charts, not you chasing price, if that makes sense. So I'm going to keep this here as a 1 to 3 with a possibility of price, where are we at? Price coming in back to respect the order block movement. In fact, we'll give that a bit more of a cushion. We'll push that out a bit more. It's a 1 to 3 there. Again, we need to see a bit more of a pullback. So if you've noticed, I've got it a couple of pips just before the order block here, and I've got it a couple of pips just after the bottom part. Very, very great. Not so much dangerous, but those there, again, there's liquidity resides within those 2 candles. Because again, liquidity on every candle, there's liquidity, to be fair, on the high side of it and the low side. But we'll see if we come in to get a touch on this, see if we get a clear, we'll take it from there. Again, if it loses, it loses. I don't care. It's just, I'm trying to show you a concept and how I would approach the 1-minute scalp. It's been very successful. Again, on the YouTube channel I have, even on the guys that are watching on Discord, I did this for around about 6 weeks. Based upon this structure and technique, did it live every morning, and we were able to sort of start from zero, and we were able to put in win rate and what's the word I'm looking for? Growth of around about 40% over that time, over them 4 to 5 weeks. Okay, so I'm going to pause the video. We'll be back in a moment just to see if this comes into play. Again, it may not. What we might find is it might come down to this area here, which is a pullback. Okay, and again, we're drilling before I do this. We're just going to mark off some key areas. Okay, so let's have a look. So from here to here, okay, we've got imbalance. Let's just get rid of this. So this is imbalance. We have a template for that. There we are. So again, price can normally come in to mitigate 50% of these areas and push off, or price may want to come down and break right the way through. But again, if we mark that to that out and we put in the firebox area, okay, the firebox, fire fib, there's a certain fib ratio of fire zones, that's the one. If I keep this in here, you will see certain areas in here will be respected within price if it comes back down to play. And again, we have the same with, let's take a look. We've got the same in there, there's imbalance there. Let's put in the fire zones onto this. And then you've got one other area of imbalance, which is there to there. And again, this is just about marking out your areas and just seeing what happens. Again, it looks a bit noisy, but this is just me showing you certain stuff in here. And I just want to sort of drill into this. And then you're going to see once we enter these imbalance zones, how these areas are just going to be respected, okay? So I'm just going to pause the video. We'll be back in a moment. We'll see if we'll get a return of price into these imbalance areas. Again, we go on about fib levels, and fib levels are just basic areas where you're going to get a premium price, a discount price, and a bargain basement price is the best way to describe that. And that's no difference on using the concept on what we're doing on here. As we enter into an imbalanced area, each area on here holds a strong significance, okay? So obviously the first point is a very strong magnet. The middle points can be where once we enter into the imbalance areas on price, you can normally see some form of consolidation within those two magnet areas. And then finally, the bottom one, price can come down and do a heavy rejection of that, or price could come down, push through that, and then as it pushes through that bottom zonal area on the fire zone, it could come back up to retest it as a magnet before shooting. In this instance, it will be back down on the downside. But we'll pause the video. We'll see what happens with regards to these imbalance areas within price at the moment, the structure of price. Let's get these marked up as imbalance. And then we'll come back. Again, we might find that this just basically shoots off, to be fair. But time will tell. Not here to be perfect, far from it. I'm far from perfect. I'm just here to try and give and understand to structure and structure points, okay? Because again, we learn every day when we're trading Forex. It's just some things that I've come with little bits of nuances and how it's helped me identify key areas and structure areas. But I'll pause the video. We'll be back in a moment. We'll let this play out for a bit. Again, it is now, what's the time? Quarter past 9. So we've got just over an hour and a bit left, and I'll be back in a moment, guys. Be back in a moment. Hi guys, so that's happened quick with regards to what I was looking at. So we've got to break a structure now, okay? So again, just marking things up. We've got to break a structure there, okay? So we've got to pull back, pull up, break a structure. That's going to give me an order block of this here, okay? I'm going to pull that out. I want to pull this in because this trade will still be live, okay? This here, we should have an order block here. And again, we'll leave these imbalance zones underneath here. Just try and ignore these for now. And again, it will look messy at the moment, but we leave everything on that we draw, because when we get to the end of the session, we sort of look at what we've been looking at, okay? And we'll just see if this can hold structure. We might find that that's a 1 to 9. That's nearly a 1 to 2, to be fair. We'll see if that'll hold structure. We'll come closer in. you'll see again, if we do wick up to the wick of here, that's there is an imbalance. It's been mitigated, obviously. Okay, but as an imbalance, we pull out our fire zone areas. And look, don't make this stuff up, guys. To the wick, right inside, reject it, and it's off. And this happens over and over and over again. I just enjoy, I've always been a long-term trader, but once I got the time and freedom to be able to do this more from home, I tried to start to understand price more, if that makes sense. So I started sort of coming up with these sort of different things and watch how price moves. And it gave me a much better understanding on the markets, to be fair. And again, we're just going to ignore everything that's underneath here at the moment and concentrate on this area. Okay. We're going to see if it comes down to smash through everything. If it does, all's not lost. It just means it's going to start coming into play into these areas underneath with regards to the imbalance and the fact what I call the fire zones anyway. So let's just take a look. This might be the crash down it's going to do. And it's fantastic watching price play out, to be fair. There we are. It's rejected again off that area. It's going to crash through. There's the imbalance met. Okay, there's our imbalance met. Is it going to come down into the area of an entry sort of thing? So what we can do, we can just get rid of this, and imbalance has been met there. So it's fully, if you look at it, it's had fully mitigated. That was the imbalance, remember? It had fully pushed through, mitigated off this as it's forming a bit of a doji and indecisive candle. Now it's heading back up. Between where the entry of the order block to that there, it's less than a pip, to be honest. Less than a pip between the entry of this order block wick to this here. And we'll just let this play a bit. We'll see how price reacts. And again, price action going down from this bit here. There's been full mitigation, or there's no sort of what's the word? No imbalance area on the higher side. So this is telling me one or two things. It's either just going to crash through all of this and create a higher high, or it's going to want to come back to mitigate into the order block. At the moment, it looks as if it's just going to want to push a little bit higher. But we'll see. We'll watch price for a bit longer. And I do urge anybody who watches this sort of stuff and watches what I do with these 1 minute scalps, give yourself a 2-hour time allowance to do this. Set yourself some goalposts. You know structure enough to be able to identify it, and just watch what it does, even for 2 hours. Record yourself if you need to go back. And like I say, the whole purpose of doing all these drawn out is because when you go back and look at what you've done between your 2 hours, okay, between here and here, you can look at the structure points you've drawn out, whether it's in balance, a swing point area breaker structure to possibly come back to return, or whether you're looking at a higher breaker structure and a smaller reward where it's going to come back down touch. And you can see on there, it's coming back through what was the imbalance at first, and it's come to respect. Let's take a look. It's coming to respect an area of liquidity, which is that there. They're going to crash through that liquidity bit. There we are. And it's just about to come into touch. Is it going to come into touch the entry? Not quite. There we are. So it's entered now. Again, to the pip, guys. Okay. So what we'll do is we'll get rid of that. I do have a feeling this is going to crash through and take out this, and it's going to come for these lower areas of imbalance, to be fair, but we'll see. But we'll see if it's actually going to give the bounce. We'll see if it's going to give the bounce to come up to take out this higher high. But there's too much of liquidity and imbalance areas down here for it to ignore that, to be fair, because it was a big, strong impulse move up, if that makes sense. Just see what it wants to do. Again, we can check that out because that was just for display. You could see that that imbalance was taken. Here we go. It's going to come down and stop this bit out. But again, today, this lesson is just all about key areas, structure. It's not so much about taking orders and things like that. So now we can get rid of that. We can say that's been mitigated out of. But that would have been a structure area that we could possibly been looking. So that now means that that order block is out. Remember, we still have this here overall, the 1 to 3. And you can see on here, it's testing the first fire zone of the imbalance. So again, imbalance is basically where we had the last candle here. Okay, we had a little bit of a selling power here to sort of mitigate into that. But all of this between this wick up to this wick here, this here has just been solid buying power. Okay, and again, that back. Again, guys, we're just going to drill into price. You can see how it's just respecting these fire zones with the contained within the imbalance. So we mark out the imbalance areas. Okay, I like to have them as a gray shaded, but at the same time, I have the fire zones within the imbalance area. So I know I've got key areas where we could get rejections, and they're just basically magnets within a bigger magnet, if that makes sense. Nested areas within a nested area. Now, if we want to be super thingy, we now have an imbalanced area there. Well, we get a slight retracement up into that area at 50% to come down back into here. Let's have a look to come further. See what happens with this. Or is it just going to want to push straight down? See, now we've had more or less 4 minutes, because each candle's a minute in this instance. Remember, 1, 2, 3, 4 minutes of price. Again, if you want to be funny, you can just do that as your imbalance area. It's fully mitigated into that, into it straight away, the imbalance area. Bang, 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 bang. It's taking all of that out. Now will it come down to take price on the lower side? And again, when you drill into price, you can just see on these, excuse me, how it just comes in and it's just playing straight into these areas. So again, that's mitigated into that nicely. Now it's rejected off the imbalance on the higher side. Now it's going to come down and probably attack the lower sides. So you can see there, full imbalance, in, out. Now, it has to attack these areas now because it's already started doing it, to be fair. We'll just see if price wants to behave in that sort of way. Let's have a look on this. And again, super tight imbalance. We've got imbalance there as well. Even just mark that out just to see that area becomes a respected area at some stage. There we are. It's sort of bounced off the middle magnet, or the fire zone as I call them. And it's pointless putting the fire zones up onto here because that there is an imbalanced area. It's probably not even a pip, to be fair. It's not even a quarter of a pip. But again, I would expect that to be touched in some way, shape or form, or rejected or pushed through and retested, to be honest. Bit of a hammer candle there. 5 seconds. 2, 1. There's a hammer formed. See, now we've got a double topped area of liquidity residing there. If you want to go even deeper, okay. And if it was to take out this double top liquidity here, the next target of liquidity is obviously going to be this imbalanced area here. If that makes sense. We'll just see what happens with regards to price. So that's the one or two things. It's either going to bounce and reject off that double top liquidity. It's took that out, spiked out. So it's took out the liquidity there. Okay. It's now took out that liquidity there. So we get rid of that. Just took out the double top as it's come down to make a lower high. I'll pause the video in a minute. We'll come back in a second. I just want to see what's going to happen we'll see what happens within the next candle, and then I'll pause the video because I don't want the video to go on obviously too long as I'm recording and sort of pausing and recording. I do tend to try and only keep these to around about 45 minutes to an hour long by the time I've got them recorded. I just want to see if this top end slight imbalance is going to be kicked out. So we're into 45 seconds of the next with no imbalance, because if you can see there, the crosshair, it goes directly right across the line there. So it's above that area at the moment. So surely it's going to wick into that little bit of an area above us now of that imbalance just above. I mean, this is obviously super refined there. It's taken that out. We have liquidity residing on the trend line up above. Excuse me, I'm tired, so we'll get rid of that now. There is liquidity here as well, to be fair. You see how it's coming to, it's respected that as well. Let's just get drilled in just to show you these fire zones. Look at that. Look at that. Again, can't make the stuff up. Can't make the stuff up. And that there in itself, that's half a pip. Half a pip refined with the fire zone. It's wicked right into my fib zones. And you can't get more precise than that. Look at that. Bang. Straight into it. Straight into it. We'll pause the video from there, guys. Okay. We'll see what's going to happen with regards to price and how it's going to respect these other areas. I think today this is going to be a good lesson with regards to how we sort of look for imbalanced areas and how we can refine the imbalanced areas with regards to the fire zones to see how it comes into respect those, and also mark out our sort of areas where liquidity can reside. So if these imbalanced areas are smashed through, these are the targets that they're going to be sort of pushing towards to take out liquidity on the buyer side, or if it's on the lower side, it would be the liquidity on the lower side. Again, good session, good video for today, for to be able to learn to get your goalpost set, but not only that, learn to identify within your 2-hour session where your imbalanced areas are going to lie. This is just going to help you train the eyes. When you're looking at higher time frame stuff, you can mark these out as well and use this as a similar technique. But when you're coming in to refine everything, you can go down, even down to your 1 minute, and then sort of mark these up as well. You'll have great fun in doing it, and I'm sure it's going to help you in the longer run to identify areas like this even better on the chart as well. So I'll pause the video. We'll be back in a moment. It is now 20 to 10. We've got less than an hour. I think I'll go and make myself a cup of tea, and I'll be back shortly. All right, so we're back, guys. Again, you can see we're starting to attack these lower areas of imbalance. We're fully mitigated into this. But again, I've kept this on just to show you the bottom target of entry is obviously this on the bottom here. We're flagging into that now. But let's just take your attention into this here. Okay. The price action here. And again, I don't make these zones up. This is just something I've learned over the years of trading. And you can see how when it's came in, even when it's fully mitigated into the area and put through it here, it's wicked back up into the center magnet. It's come back down, center magnet, and then it's doing this, and it's constantly coming in between these areas here. Okay, so now we have got, when you look at this, we've got an area of liquidity on the bottom side here. And if we come in to attack that and we take that out, we would then be looking at the two lower areas of imbalance, which we marked out earlier on this morning. And this would just give us not so much confluence, but it'll give us some extra probability that it is eventually going to come through here and mitigate the contracts that were left behind in the imbalanced area, because when we look back, we can see here there's some heavy imbalance between there. Again, this is just about training the eye and learning to look at structure points at the moment. Today's lesson or today's session is all about imbalance, how to identify them, and how to use these fire zones. Again, if you want to know more about what the fire zones are, you just need to be inside of the Discord channel that we have. I go more in depth in that on what they are and how you can set them up to help you not only sort of look at imbalance areas, but it lets you refine. That's the best word to use. It's going to let you refine areas of importance, POIs, that nest inside of the imbalance areas, if that makes sense. So again, it's taking out this liquidity here. And again, I'm not rushing into anything. I'm just showing you what's happening as price moves. Okay. So again, as that's come down to mitigate out that holds liquidity in itself. You're then looking at the imbalance to that is less than not even a quarter of a pip. We might find that will actually come down into here, possibly come down to come back up. We are shooting back up now as I say that. So again, I don't make this stuff up, guys. Come back up to respect the inner magnet or the inner fire zone. Again, from an aspect of liquidity, there's liquidity here. There's like a trend liquidity. So it's taken out the lower highs here. At the moment, if you look across the band, there is a liquidity area there as well. Hasn't quite taken that out. There's all sorts you can mark up on these charts, but just look at the spike that it done from when I said it was going to mitigate under here. That's where the liquidity is. It spiked right up into the inner fire zone. Whether it's going to want to come back down is another thing, because when we look at that flag, the flag pattern, impulse drive, beautiful flag pattern coming down. Let's just take a look. Again, the other way you can look at this is obviously you've got your trend line there, but then you've got your flag coming down. Look at the median price, the pullback areas, bang, bang, bang. And again, if we pull out of here, we might get a retest. And then if it pulls out of this flag channel coming down and it pushes out to this higher zone, we might get a retest back on the middle zone, and then we might go to attack the liquidity on this higher side. Or it'll stay within the channel, okay? It may stay within the channel and eventually come down to attack these imbalance areas with the key point of interest of the fire zones that lie within, nested inside of the imbalance areas, okay? So I'm just going to take that channel out. And then again, you can see how it's staying in, it's respecting these. Even when it bounces out, it's coming back into these areas here. Scroll back in. We'll give it another minute or two. And you can see how, excuse me, I go back onto the fact that we've set a 2-hour time slot. We haven't, or we wouldn't have entered into any trade as such at the moment, other than, excuse me, other than what we've got here based upon that swing. This was the initial trade. We had the range, which consisted of this 15-minute range, intermediary price, okay? And then we broke out of the buyers on the higher side, okay? And as we broke out of that, we identified the order block within that smaller range. And that order block was that here, okay? Now we come out and now we're flagging in with a beautiful flag pattern, which is, it's got a high, a lower high, a lower lower, lower high, lower lower, lower high, lower lower, and then we've got a lower high. This would stay as a lower high as long as it does not push out of that area there. It's got into respect that now. And again, doing this, I'm doing this as we're live. It's respected, and that's double topped up, and now it's pushing down. Live price action and talking you through it, commentating as we're doing. Again, now we're coming down through. We already full mitigated through, but now we've got a strong impulsive move coming down to attack the liquidity on these lower ends. Let's just make this a little bit better. Will it attack this area here? Just 8 seconds left of the candle. Excuse me. Again, we've still got imbalance, which is none of us has been mitigated yet. Imbalance, none of that's been mitigated yet. And then we've got the entry point on the bottom. And let's just take a look at this as well. I just want to, we have been talking at the moment, I've been commenting most certainly from that aspect there, because you're talking that there up to there. I've been working within a 9 pip range, telling you how price is moving and the key areas of importance that it's been respecting. One of two things, again, if we do get where are we at? If we do get the push, if we do get this push up here, breaking this, we then may get a reversal trend and then hit this higher side for to possibly come right the way back down. Just a thought, it's one possibility. Or we may simply get the push down. We might get the push up and then we might come in to attack these areas here. But we'll just see which way it wants to take. Again, talking about liquidity, all this here resides down as liquidity here. It's starting to come to attack. It's starting to come to attack the area, to be fair, simply because we've got the double top here. We'll see what happens. I'll still line for a little bit more. We'll just see if it's actually going to give the push through. Again, there's your magnet area. Is it going to push higher into the next sort of nested fire zone? Bit of a rejection. Again, a little bit of liquidity residing there as well. We'll see what happens after this candle here. 20 seconds left of this candle, then we'll pause it. We'll come back in a second. That's the candle there. And again, it's beautifully into the inner magnets or the inner fire zones, which hold a lot of significance, to be fair. Again, we tested that. We've come to test the middle part, to be fair. We'll see if we're going to get that push down or whether it's going to go higher. Again, we've got liquidity residing on these lower lows than this one here. Structure-wise, the key areas at the moment that I'm looking at for any, if there is going to be any sort of break and reversal, there's two areas, to be fair. It's the buyer side where we've had this double top, and the other key area that resides at the moment is this here. Okay, so we're basically talking about that range. This is the key area at the moment. Okay, that's your key area at the moment. This is going to determine which sort of direction we're going to be taking, whether there's a break and then sort of come down to the other areas, whether it's on the high side or the buy side. There we are there now. We're broken out of that. We're coming in to mitigate into the lower end, so we can get rid of that. And it's sort of done the other one that I was expecting. Full mitigation of this imbalance. Look where it's tested. Bang on the bottom end of the fire zone. It's coming in to attack the other area now. Again, this will hold structure. I'll just play this out of here. Again, this might stop us out, to be fair. This might actually stop us out, but we'll see. We'll see what it wants to play. We'll get rid of this. And again, looking at this lower side imbalance, look at where it's at. 50% bang in. 50% holds so much. What's the word? So much weight within Forex. 50%. It's generally the go-to area, to be fair. Just cancel that off. Excuse me. So I'll pause the video. It is now, what's the time? 5. We've got about half an hour left. we'll let this play out a little bit more and we'll come back in a moment. We'll see what's happening with price. Just before we go, I want to drill into the range, what we've got coming down. There's no imbalance there. Price is pretty clean as it's come down. As it's come down here, to be fair, we've got no imbalance in these areas. So again, we might get again, we've had that push into the center, coming back down into here. We might get another rejection off one of these zones here, to be fair. But again, we'll let price do what it needs to do, and we will come back in a second. Again, we've got liquidity on the downtrend here. This here is a significant area still because it's where we've come down to make a lower low. It didn't break the structure of this lower high. So again, the area of importance, once again, is this structure here, including where it's wick to now. So we've got a bit of a range, if that makes sense. We break out of here, we could most certainly come down to test the entry area. I hope you're enjoying the video so far. Don't forget to comment, like, share, give it a thumbs up, hit the subscribe to the YouTube channel if you're not already doing it, hit the notification bell, and you'll see more videos as and when I do these. And again, I urge anybody to practice doing this. It's just going to give your eye a little bit of a trained sort of aspect to the charts, to be fair, especially when it comes to imbalance and how they're respected. So I'm going to pause the video. We'll be back in a second and we'll see if we actually going to come back up to the higher side or if we're going to come down to the lower side. Okay, so I'll be back in a second. So there we have, guys. Again, we've come back up to that double top area. We've now treble topped it within the range that we've marked out. The imbalance area that we're in at the moment obviously being fully mitigated, but it's still touching these key zones which I marked out earlier, which I shown you. We've not yet, in fact, we had a full mitigation of the one lower down. Okay, but again, we'll come back out to play. Hopefully this is going to hold its structure point, and then we might see this sort of reverse down into the lower areas with a bit of luck. We're just waiting to see what current prices want to do. We don't really have, from price action, any sort of imbalance areas because we've got a mitigation here, full mitigate, very clean on the price action, to be fair. So yeah, we've got clean price action on the downside, to be fair. So again, this could potentially mean the areas that we're looking at to be attacked now is certainly the lower side here of this imbalance, or if it wants to go higher, it will start attacking the liquidity here. It will start attacking the liquidity on this sort of lower high, and then these lower highs here on the trend. Okay, hopefully it's going to come down because we've got clean price action here at the minute of mitigation and what's the word, the imbalance areas. There's no sort of imbalance areas here. It's all being cleanly taken. Hopefully we'll get that drive down to come to the entry to then want to come back up to start attacking these lower highs that this flag has been starting to produce on its way back down. It's just slowly been coming down to that area, if that makes sense, and it's left behind the footprint of liquidities on these lower highs coming down, double treble top here again as we're flagged down, but then we're coming on the pull back up to create these lower highs. The current lower high on here from the lower low, okay, this has got clean price action, so there's no imbalance within here. And again, when you drill your sort of areas down and you look at these, it's sort of going to highlight your upper areas on your lower highs, and also in this instance the lower side, which below this lower high is now residing in the entry area. Again, we're just waiting to see what price does. Now, me personally, if I'm using the scalping technique, okay, And because I've got about 3 or 4 different accounts. If I use this technique, whatever 2 hours I give myself on the charts, if the entry was not to come into play on this, I would just count it as a scratch there. Okay, I wouldn't go chasing the price. All I would do is at the end of the session, I sort of look back at what I've marked up, what I've done. I would take notes, and then I would just take it as a positive that I've sort of been learning the structure points and point of interests a bit more. Okay, you should never go look at the chaser price. You should never go look at the chasing an entry. You just got to understand that you're giving yourself the goal, especially on a scalping session, giving yourself a goalpost of time that you're allowing the charts to have your attention. It's not about looking for, we'll get in here, we'll get in there. You need to understand the structure, why it's playing into these areas, how it's playing into areas. If it plays into these areas, where's the next area it could go to attack, simply for where is the most hurtful area with the limit areas or the stop areas where price can go to attack to take people out to grab their money, because that's what price does. To be fair, it will only go to where it can hurt the most people, to be honest. Okay, so again, we're going to pause the video. We are at current price action of 10 minutes left to play. Will we get a drive down from this lower high after the treble touch, 1, 2, 3 touch? Will we have this respected, and will we come down for a final impulse drive down to break out of this lower low to hit the entry? We'll soon find out in the next 5 or 10 minutes, guys. Okay, I'll speak to you in a bit. Right, okay, guys, so the session, we had the impulse, all right, we had the flag come down. We didn't get it to come down into these areas to sort of hit the entry. However, we have now came out of this 1, 2, 3 touch, and it sort of break up into the higher area. Okay, and just as a final thought, I'm just going to show you, look at this. This was barely half a pip. Okay, I said it will come to attack this area, and look what it's done. Straight to it. Now it's wicked. Now it's done a wick to wick, but you can see it rejected, and it's coming back down now. Look, it's totally taken out the liquidity on that imbalance, and now it's going to drive down. And if you look at this, we had the impulse drive up from there to there, a couple of pip move. We've now, when you look at it, got a huge imbalance area from there to there. And it's more or less the imbalance that was created earlier. We just get rid of that. It's more or less the imbalance area of what that zone is. So again, it's holding some weight. From there, guys, just going to stop the video. It will come down to sort of hit into this at some point. I'm just going to stop the share and just give you my final thoughts. Again, this has not been a video to show you my trading sort of, what's the word they use, where I'm going to take trades. It's just me looking at structure, me looking at how I identify areas, especially when I'm looking at sort of possibly getting a few pips in and out of the market. When I do that and I'm in that frame of mind that I'm going to scalp for a little bit, I will set myself a time frame, not so much a time frame, set myself a time that I'm allowing the charts to have my attention. And then from there, that's the sort of approach on how I look at the run of play, okay? Using the 1 minute chart, identifying structure points with the swing points, and then marking that up to the 15-minute, obviously having your ranges within that. And then from there, I work myself within a point of interest based upon when we have a break of structure, I look upon obviously the order block from where we swung out from. And then within that range, I look for imbalance areas where price can react from. Easy things like liquidity, but more importantly, within those areas of supply and demand, which is going to be your imbalance areas, we are looking at what I call the fire zones, which is very, very high probable areas or points of interest of swing fib zones, just not based within the swing to the swing, it's based within the swing area of where there's improper price action. Okay, so again, I hope you've enjoyed the video today. Please don't forget to drop a like, comment, a share. The more that I see with engagement on videos, especially like this, the more I get involved to create more content based upon that sort of stuff that I've done. And I hope you've enjoyed the video today. Please don't forget to comment, like, share. If you're not already subscribed to the YouTube channel, hit the subscribe, hit the notification bell, and then anything that I do will become live as and when you want to see it. Okay, guys? So thank you very much. My name has been John, Mr. Forex Fire.